Okay, folks, welcome to Sunday Night Futures Live. Welcome another Sunday. What we're going to talk about tonight, besides the opening futures action, we're going to talk about Bitcoin. We'll be talking about the price action over the weekend, a very rough weekend. We'll talk about where I think it's going to be headed and the reasons why we're not invested in Bitcoin. We do have an exposure vis-a-vis Coinbase, but other than that, no exposure to crypto. We'll talk about the valuations of the market as we do every Sunday as we proceed into the new trading week. And let's get to it. Before we begin, let's say hello to everyone. Franklin, hello. Show us the money. You got it. John Spencer, always a bull market somewhere. Very true. Top of the morning to you, John. Falcon, hey, brother. Okay. Before we get to it, let's pay the bills by giving a shout out to our friends over at TrendSpider. Folks, automate your technical analysis by subscribing to TrendSpider. Automate your grunt work, speed up your technical analysis while also improving your accuracy. There's no sense in speeding up your analysis if you're not going to get a lift on quality. Reduce costly analytical mistakes and time your trades with precision by using their alerts. You'll see me use them in a little while. Fine weighted chart setups with their scanners. They're already pre-built. I haven't built one of them. I use them. I have never built one. I've modified, but I steal them. They're available to steal. So just go in there. There are dozens of them. Choose one. Make it your own. And there's a link below, 35% discount code. I give it away free to silver and gold level members. So sign up for the 14-day free trial offer to the Contrarian Trader. Let's begin. Let's go to the futures action first. And then we'll circle back to the valuation of the market and then a discussion about Bitcoin. Now, we have a gap down. These are going to be 4-hour charts. We have a gap down on the NASDAQ 100. On the week ahead commentary with members, I was very concerned about this market going into the new trading week. Why? It's because we're seeing setups occur in the market where you should expect to see follow through to the upside. The problem is that we're not getting the follow through. Thursday's price action on the market was very, very healthy. The problem is that on Friday, which should have been a big up day and a follow through on Thursday's good bullish price action, it didn't happen. We gapped up, we faded. Bad stuff. Now, what we're seeing on the NASDAQ 100 is a gap down. We're down about just shy of a quarter percentage point. The problem is this, is that we've gapped down below support levels. Not one, but two. Actually, just one. Okay. Let's stick with equities for a moment. We'll go to the Russell, of which we are short. The Russell is down just shy of a quarter percentage point. We have support right here at around 21.95 on the Russell E-minis. What I want to know is this: do we break? We'll create an alert for ourselves. Okay, we're good. Let's move on to the S&P 500. The S&P 500 is down as well. Now, this is the wrong chart. There we go. Okay, so the S&P 500 not down as much. We're down. We just took a little bit of a spill there. down 0.14%, and falling pretty quickly here. So 1 minute chart. We should pop here in a second. But I'm not a day trader, so the VIX is rallying. VIX is in the lower right corner. The VIX is rallying as you might expect. Big move up higher here. We're going to rally here in a moment. We're on a 5 minute chart now. The question is, do we put in a lower high and roll over? I think we do. Let's go back to a 4-hour chart. Let's bring up the US dollar. Actually, still stick with equities. Go to the Dow first. The Dow was flat. Now, here's the problem with the Dow Jones Industrials is that the Dow Transports last week had a very, very rough week. And we like to use the Dow Transports as our canary in the coal mine for equities. So as goes the transports, normally so goes the rest of the market. So we're, again, flat on the session, but the Dow Jones is suspect at current. I think we may roll over here, especially given the price action on the rest of the market. Let's take a quick look at the U.S. Sorry about that noise. I hate that. The U.S. dollar. The dollar, they've gapped up. Back above 90. Let's move now into commodities. Light sweet crude is up just over a 0.25 percentage point. This is why you're seeing the S&P 500 not as weak as your higher beta names in the NASDAQ 100, because you have your energy stocks in the S&P 500 that trade pretty much in lockstep correlation with oil. If oil rolls over here, expect the S&Ps to weaken up as well. Gold. Gold is up $4.50 the ounce. I'm going to tell you a reason why you should be extra bullish on gold going into the new trading week. The Federal Reserve came out with a statement yesterday on a Saturday. I'll go to that in a moment. I have the statement. Let's take a look at silver. I should have had this set up. No, let's go to copper. Copper's up over 1/3 of a percentage point. Silver. Silver's up just shy of a 0.5 percentage point. Both silver and gold had a pretty rough day on Friday. Okay, Bitcoin. Bitcoin continues to fall here, but I think a lot of the damage has already been done. I think we're dealing with a couple of different issues with Bitcoin. One is that your volatility plays, your high beta plays in the stock market, where you're aware that GameStop and Tesla peaked out the week of January the 25th, and Tesla's been underperforming GameStop ever since. Bitcoin, not the same. It continued higher of late. The problem is that Colonial Pipeline story. That was the pin that pricked the bubble, because you saw a big rounding top on a monthly time frame on Bitcoin, but it was overbought, very, very overbought. It was looking for a reason to drop. Colonial Pipeline was that reason. Add to that, the fact that you have the IRS now inquiring about Bitcoin and who's paying taxes and whatnot. You knew this was going to happen. This is why I did not want to be an owner of Bitcoin, because there's no regulation as of yet. There will be. The people that are out there think that there's not going to be any regulation. Good luck with that. And that's the reason why I did not want to have any exposure to cryptocurrencies. I wouldn't know a Bitcoin from an Ethereum from a Dogecoin. I don't know the difference. I don't know who's going to be the winner. And I'm not going to pretend that I do. All I do know is that the U.S. government will get its pound of flesh in terms of taxes. To think otherwise is a fool's errand. So that is why I've avoided it. I will look far more closely at getting long of whichever appears to be the winner. I mean, Bitcoin is still the winner in terms of market share. Will it be the ultimate winner? Who knows? But only when the rules of the game are laid out and it's time to go swimming in that ocean. Right now, no way. So let's take a look at the charts of Bitcoin. And I'll give you the good news and the bad news here. Here's the weekly chart of Bitcoin. And you can see we put in a rounding top on Bitcoin. I drew this line a long time ago, several weeks ago. I said, beware here. We're looking at a double top, a breakdown on RSI. If you take a look at a monthly chart, you had RSI on a monthly time frame above 90. So technically, this was a trading vehicle that was poised for a rollover. All it needed was a push, a pin, and they got it. And that pin was Colonial Pipeline. They paid the hackers in Bitcoin, and they're never going to pay a penny in taxes on it. So that's not going to happen. That's not going to be allowed to stand. So this is why I think that we're probably going to see lower lows on Bitcoin. However, I think that when you take a look at the weekly chart, I think a lot of the damage has been done here. That doesn't mean that we can't head lower on Bitcoin, but we have some real serious support at around 28,000. Let me validate that. 28.5 is very good support. I think that an overshoot to that support level, I think you're going to see buyers step in and begin buying up Bitcoin. Your Stokes are continuing to roll over here. I would expect to see continued pressure on Bitcoin, but expect some buying at around that 28 to 28.5 level. Will that be the bottom? Not quite sure, because then it comes down to what are the rules of the game? Are we anywhere near having any type of regulation on Bitcoin? Not that I can see. So me, I'll play the Coinbases of the world, the exchanges for now anyway, and I'll steer clear of Bitcoin, and I'll leave that for those folks that have far more higher risk tolerances than I did. And I have been long of Bitcoin. We made money on it. I sold it a long time ago, but I don't see this as an opportunity just yet. I want to see the rules of the game. Once we have the rules of the game, and they're coming, then I would entertain buying crypto. Not yet, though. Let's take a look at some comments. Larry. No, I got out of the pool, and I just jumped in the shower, slicked it back with some gel, and I did the Gordon Gekko look. So I need a haircut bad. Hey, well, Mr. G, hello. Clark, hello. Randy, hello. Jody, hello. R-Train. I think the tip of the week, the wave 4 for Triple Q and the SPY. Hopefully you're right on the Qs. Because we opened up a short position. We're short of the Qs. We're short of the small caps. Will, I find the amount of negative headlines about Bitcoin to be very suspicious. Yeah, it's right. It's a bear rate. It's a bear rate. And Colonial Pipeline didn't help. The federal government, let's face it, the federal government, with the Jen Psaki was asked the question about Should Colonial Pipeline pay that ransom? I thought then, what I think now, I think that they opened up the door for them to pay that ransom so that they could come in and regulate cryptocurrencies. Because the only way they were going to get paid was in crypto. Now they're going to say they have every right, the federal government has every right at this point in time to say, you know what, you paid off terrorists with cryptocurrency, therefore it needs to get regulated. And it's going to happen. It's only a matter of time. So, for Jen Psaki to come out and say, we need to let the private sector make their own decisions rather than we don't negotiate with terrorists, that was a trap, man. That was a clear trap for Colonial Pipeline and crypto traders. It's my opinion. Randy, cryptos are the global currency for criminals and rogue nations. Unfortunately, yeah. I mean, yeah. Clark, you bought you bought today? I don't think you get hurt all that bad. Hey, Paul. All right, let's take a look at some headlines that came out over the weekend, and I find it mind-blowing. And this is why. Let's circle back really quick. I want to take a look at gold. I think this is going to be a big week for gold because the Federal Reserve is just out of control. No real capitalizing on the price since we last looked at it. But what came out yesterday was this. Fed officials' new data start lowering expectations for U.S. jobs in May. Now, why do they need to lower expectations about job growth? The reason is that the federal government is paying people to stay home for the summer. So basically, businesses are competing with the federal government to bribe people to stay home for the summer, or they need to increase wages to bring them back to the workforce. That's inflation. So the federal government on a Saturday releases this statement that you need to start lowering your expectations with regard to growth in terms of job market, GDP growth. Yet we have inflation. Inflation is on the rise. Stagflation, stagnant growth, high inflation. The perfect petri dish for gold and silver, and a horrible environment for the U.S. dollar. So, this being known as we proceed into the new trading week, expect to see lowering of expectations by the Federal Reserve. Economic data coming out this week. Not much in terms of the number of reports, but those reports that are set to be released are pretty important. On Tuesday, we get consumer confidence. Nothing on Wednesday, nothing on Monday. Thursday, initial jobless claims. Keep in mind, while this number is falling, the number of jobless claims being reported is still 200,000 per week more than pre-COVID. And we're still seeing net job losses because this is a number that is reported every week. We only get the non-farm payrolls once a month. So on net, you're seeing job losses in the economy despite the fact that we're opening. GDP, we're going to get a revision this week. This is going to be interesting. I think that this report here is massaging, getting the market ready for a lower than expected GDP revision for Q1. Durable goods coming out on Thursday, a very important number. You would expect with all the housing builds, housing sales, you would expect to see washing machine, dryers, a lot of those sales being made. I would be shocked to see a miss here, but in this environment, who knows? On Friday, consumer spending. That should be really great. Consumers have refound their love for credit cards. They're staying home. They're buying on Amazon. Actually, Amazon's falling apart, along with Apple. You're seeing a breakdown on those names. Core inflation on Friday. More inflationary data coming out. So, folks, buckle up. It's going to be a very interesting week. Let's talk about valuations as we proceed into the new trading week. They have still yet to update this chart to reflect a third standard deviation. We're still well above the 2 standard deviation, very, very overvalued, strongly overvalued going into the new trading week. When you take a look at the Schiller PE ratio, we're at still highs not seen since post the dot-com bubble, well above the financial crisis. And in terms of S&P real earnings growth, we are breaking down to new lower lows and lower highs. This is not good. We're at lows not seen since 2010 in terms of real earnings growth on the S&P 500. So, with all that good news as we proceed into the new trading week, let's take a look at some chart requests. PSFE is the first one. If you have any you want me to go over, just drop them into the chat box. We should have a lot of time here. Yes, plenty of time. PSFE. Weekly chart. We're at resistance here. I'm going to take off the automated trend lines. I'm going to put them back on. And there you have it. All right, so we had a nasty breakdown the week of May the 10th. Last week was an inside week, but it failed to hold. It failed to hold critical support at $11.96. I would not be a buyer of the shares until we were able to close back above that level. Daily chart. All right, so on a daily time frame, again, the value of automated trend lines. You can see that we have stiff resistance above here on both a weekly and a daily time frame. We broke out on the 19th, attempted to rally, we were rejected. We pulled back to the retest of support. If you're going to buy this, I would use a stop right below Friday's lows. I would stay very, very small and then add more as we begin to break out above resistance levels. And if we have time, I'm going to circle back to the future, see how everything's unfolding. Right now, I would avoid this stock. I would not be a buyer of it. Again, if you're going to do it, stay very, very small. Use a tight stop, probably around, heck, if we close down below, back down into this downtrend channel, the upper band is in red. The lower band is in blue. If we break back down and fall and close back down within that channel, I would get out. That's a bull trap. The US dollar is used more than cryptos, no doubt. Still, 65% of all transactions are done in US dollars. But that's dropping dramatically. ADSK, Autodesk. Monthly chart. I want to take off the automated trend lines. I don't like them to influence me too much initially. Multi-month consolidation here. Let's throw them back up now. All right, so here's the play for me on Autodesk. We have a triangle formation on a monthly time frame, weekly chart. All right. So I like the weekly chart better to use to strategize here. What you're seeing is it it looks like a downtrend channel, but it's really not. It's more of a bull flag setup. And the lower band, again, I'm going to show you. Take off the automated trend lines, throw them back up. There's your pattern. So I'm going to modify this a bit to illustrate why I'm a bit more constructive on ADSK, because what we're doing is we're putting in higher lows now. And I'd be fine if you wanted to open up a trade, given the bullish reversal bar last week, or if we did a retest of support. Keep a little bit of sensitivity on. Okay. And we'll keep this active for a couple of weeks. I like the setup here. As a matter of fact, I'm going to keep this active for a month, because I like the multi-month consolidation. So I would initiate a trade on a retest of weekly support and then add more on a breakout above resistance. And we'll also keep this active for 30 days. Now we'll go to a daily chart. We'll see if there's anything there that could influence me to get, not really, to get long, no. No. I'm going to show you again the automated trend lines. Right above here at around 286.72, we have resistance. I don't see a compelling reason to go chasing at current. And we faded on Friday. A great Wednesday, a great Thursday, no follow through on Friday. We faded. So allow for a pullback, a better setup to initiate before you get long. That's what I would do anyway. What else do we have? You're welcome, our train. Farm. Woo-wee. Look at this. Daily chart's awesome. I don't know this stock. Weekly chart is awesome. Monthly chart is awesome. Awesome. Where to begin here? Wow. Okay, so to begin, we had a multi-month base that built. Very nice. And you can see here, we broke out above resistance in February, continuation move higher. In March, sideways consolidation. In April, follow through to the upside in May. Perfect. Weekly chart. Multi-week consolidation. It got a little bit extended back here. And if you had the automated trend lines up, you would have known, wait for the breakout, because those guys who bought here got stuck and had to wait. But they did finally break it out last week. The play here would be this. This would be really, really good stuff. Is if we retraced back down to support. Because technicians like me, what we want to see, especially with a stock that is breaking out of a multi-month consolidation, for the longest time it was in a downtrend, and then it was in a base. So confidence is still being built here. So what you want is for this long-term resistance level to now act as support. That's what I'd be looking for. So we want to see a retrace. And if it holds, if it bounces, that's a confidence builder. And if the market weakens up this week, then that may give you the opportunity that you're looking for to get long. I may be a part of this. I really like this chart. I mean, a very nice day on Friday. Despite the fade in the market. Now, we did break out above another daily resistance level. I would set an alert there, but I'm not willing to buy at that support. I want to wait for a retest down to this support level here. Let's negotiate this a bit. I'm going to set an alert. I want to know if we break through it. And that'll keep me eyeballing that weekly support level, which we had the alert set at to get long. And we'll keep this active again for 20 days. It's good. Great volume on Friday. That's institutional accumulation. That's good stuff. I like this chart. Farm, bullish. What else do we have? I know we skipped one. Randy, ICLN. Oh, the Global Clean Energy Index. Okay. Monthly chart. It looks very, very good. Despite the fact that we're down on the month, it got extended. And again, guys, the value of the automated trend lines. Were you long here, I would have told you to start looking to get out as we pierce the third standard deviation Bollinger Band. But if you needed reinforcement, all you need to do, use the automated trend lines, and they would have told you. You got sellers up here, and you would have gotten out, especially when you're trading above the 3D Bollinger Band. Now we pull back. Volume is still heavy on the month, but we're well off the lows of the month. And here's where I like support. Right at the bottom of this volume shelf. Let's go to a weekly chart. You can see that we reversed last week off of that volume shelf. Now we need a breakout. Because at current, we're still putting in lower highs and lower lows. The downtrend is not over. But we did last week break out above resistance. Now what I want to do here is I want to see if we get a retrace, a retest of the breakout point. I'm going to keep this active. I guess 20 days is good. Good. So we have a breakout in a weekly time frame. That doesn't mean I'm going to buy it. It means I just want to watch it, monitor it, and ideally get a retest. Daily chart. Daily chart, obviously we broke out. Continuation move higher on Friday, but a fade. That sets the stage for a pullback. I'm happy with where my alert is. We're good to go. So ICLN looking good. Let it back and fill. It's not going to go straight up. Let it back and fill. No great rush. Good price action on a weekly time frame. Monthly chart improving. Just allow it to come to you. That way you can set a stop loss right below this support level so that if it fails, you stay small with your position. If you have to stop out, you have a small loss. It happens. What else do we have? You're welcome, Lee. Anytime, man. JAGX. Jaguar Health. We've gone over this one before. It's been a while. Yeah. Now I remember this one. Nice. Right where we drew our support levels, it held. One spot two, let's call it, we got to round it up. One spot 29 per share. Looking very good. On the month, volume is very light. That's good stuff. Weekly chart. You have your rising 50-period moving average acting as support. Also, our support level, which we spoke about. I don't know how long ago we spoke about this, but we identified this as being support as well, and it is holding. So, nice reversal bar last week. I think this is a buy. Daily chart. Now, what you may get here, if you're looking for a better risk reward entry point, again, stocks that have been under a lot of pressure and they're beginning to break out, they normally just don't go shooting straight up higher. So the trophy goes to the guy that has the patience to wait and allow it to come, or gal, or thee or they, them, allows the shares to come to them. JAGX. All right. And we're good to go. That support level is right at one spot 29 per share. You know, give or take a penny. But it's looking very good. So Jaguar, good stuff. 40,000 headsmen. Hello, brother. What's the buzz? Tell me what's happening. All right. Do we have any? Did I miss anybody? All right, good. All right, let's circle back. Let's take a look at the futures action. Let's go to equities. All right, so the Russell 2000 has bounced back a little bit. We knew there was going to be a bounce. The question is, this is now a 5-minute chart. The question is, do we roll over? Okay, let's go to the NASDAQ 100. Still weak. We did rally back here a little bit. My guess is that bonds are down and yields are up. Let's validate that. We'll come back to this chart. Where's my 10-year? No. I'm surprised to see the weakness on the NASDAQ. You have bonds which are being bid. Let's go back to the NASDAQ really quick. Set an alert. Let's take a look at the S&P 500. As long as yields stay down, there's a very good chance that this may all turn around tonight. But if yields spike up higher, that's not going to bode well for the NASDAQ. The S&Ps, as long as oil stays up, they can move up higher because of energy. There they go now. They'll probably turn this around. 4150 on the SPY, S&P 500, appears to be a bit of a battleground at current. They gapped it down through it, rallied it back, failed, pulled back, higher low. Now they're struggling to break through it. We're at 41.49 now, still struggling. 1 minute chart. All right, our alerts are set. Let's go to the Dow. The Dow is up. No great shock. Okay. So a good rally back here off the lows for the Dow. Do we break out? Or do we fail? Not a lot of volume here. Very thin volume tonight. Okay. Cena. Hey, Cena. Nvidia offers a share split 4-for-1 at Jump Friday. What do you think about the effect of such news on stocks? It really doesn't mean much to me, to be honest with you. There's a lot of people think that it's a bullish thing. To me, it's not. There's no change to fundamentals. They're not issuing new shares. There's the shares outstanding that are going to increase, yes, but the basis cost is just going to be divided by equally among those shares. So it's not negative. It's not positive. How about Tile? If you have time, Tile. Yeah, we have time. You got it, John. I don't know this company. So let me go to the monthly chart first to get a feel for where it's been. Really nice monthly chart. I'm going to take the automated trend lines off. And it tells you a story here. Here's the story. We broke out in February, retest number 1 of support, retest number 2 of support, follow through. Very, very bullish chart. Very, very bullish chart. We are going to have resistance up here at around 1776. Great number, great year, and a very good movie. So I'd watch out for that resistance levels. Maybe you want to book profits if you're long up at that level because you're going to have a ton of sellers up there. Weekly chart. We broke out last week. Again, the automated trend lines. We broke out last week. I'd be looking for a retracement and a retest. A wee bit of sensitivity, not too much. So, very nice breakout last week, daily chart. All right, so on a daily time frame, I think this retest is going to happen. Why? It's because, again, the power of the automated trend line. We rallied last week on Friday, but we were stopped at resistance. You can see the selling. So the logical thing to do is to retrace back down to a support level, which was resistance here, should now act as support. Let's take a look at let's go to a 2-hour chart. Two-hour chart looks pretty good, to be honest with you. We broke out on a 2-hour time frame. But here's the support level I'd be watching for. If we get a gap down, you'd want to see 1509 hold as support. Excuse me, folks. A bit parched. What else do we have? EEM. So tile looking good, very bullish. Emerging markets. Okay. EEM, we'll use EEM, usually use EDC, but you're seeing a very, very nice consolidation here. When the dollar rolls over, and it will roll over, you're going to see a breakout on emerging markets. So our strategy, I'm going to go to a weekly chart in a moment. Our strategy at the Contrarian Trader has been to avoid beta, if anything, short beta, meaning high volatility. Stay long of the gold miners, silver miners, silver, some food exposure for inflationary purposes, and getting ready now to rotate reserves into emerging markets on a weaker US dollar, because there's more value overseas in the emerging markets than there is here in the United States. So as the US dollar corrects, the debt of those countries that are in the emerging market space becomes far more easier to pay off because the dollar is cheaper. They have to pay back that money in US dollars. Most of these countries are commodity producers. What's happening with commodities right now? Going up. So the value of what they're exporting is going up in value. The value of the dollar of which they must repay their debt in is going down in value. So it's like a tax cut. So this is where we want to focus next on building positions on emerging markets. And in particular, Vietnam, EEM is fine, EDC is fine. Weekly chart, EEM. We're still putting in lower highs here and lower lows. If the dollar begins to roll over again, I would, on any retracement back down to 51.51 on the EEM, I'd say it's okay to nibble. But I would stay small. Then, once you begin to break out above resistance, you start getting bigger. And we'll go out 40 days here. So our alerts are set. Until they fire off, we don't want to speculate. Let the shares come to us. And you can see what happened on Friday. We broke out on Thursday above daily resistance. Again, the automated trend line in red. I'll take it off, put it back on. There you have it. We had a breakout point failure or a bull trap on Friday. I would expect weakness. You have the dollar up right now. The U.S. dollar is up right now. Assuming that carries through to tomorrow, you're probably going to see weakness on the EEM, so no rush here. We're still in a long-term consolidation on the EEM. And we'll leave it off with MNMD from Mr. G. Mind Medicine. Interesting name. Not much data on a monthly time frame. There's your trading range, fairly wide. $2 to $5. We're in the middle of that trading range. Weekly chart. Ooh, very interesting. So we reversed off of, I'm going to take these off, throw them back on. This line in blue, there's actually two support levels, one in green, one in blue. We reversed off of those support levels, rising support levels, the week of April the 19th, broke out during the week of the 26th of April, where we rejected because we hit resistance. We've pulled back, and we're retesting the breakout point on MNMD. Daily chart. You got a bit of a, I don't want to call it a megaphone formation. It's not really, it's like a reverse triangle formation. It's rare, where you have Your upper band of resistance here, clear and defined, automated. We rallied through it on Friday. We were rejected, back down to this lower band of support. I'd be a buyer here. On a retracement. And you could swing trade this easily. Just watch this upper band in blue. Once you buy down here at the support level, you rally up to this upper band in blue, you get out. If that's your style of trading, unless you're looking to buy it as an investment. But it's a good looking chart. A couple of good looking charts here. So looks pretty good. U.S. Steel. You know, ever since that CPI data came out, what was it, 2 weeks ago now? It was a sell the news event, with the exception of precious metals, which hadn't really been in rally mode anyway. You saw commodities come off. You saw agriculture come off. Copper came off. Lumber came off. U.S. Steel came off. Is the rally over? I don't think so. It's just taking a breather right now. I don't like the fact, not that the month is over yet. It's not over. Maybe we'll rally back. Maybe we'll go to new all-time highs this week. I'm not that smart. But let's get rid of this. You have a big wick here, big topping tail, and I don't like that. So the monthly chart is a bit of a concern. What we could do is this. Here's your new significant resistance, which you're waiting for a breakout and above. And it may take another couple of months to work through this. Weekly chart. We broke down last week. 2246 is critical support. If we fail to hold 2246, which I don't think we're going to fail, but you never know, we come down here to 2150 per share. Let's go to the daily chart. Yeah, they're selling strength here. They bounced it off of support on Thursday. They tried to rally it on Friday, rejected at resistance. No rush here. I would let this play out. You're going to get a lot of backing and filling. No rush. One strategy would be, sell deep out of the money puts, or if you're neutral on the stock, open up a strangle. I wouldn't be a buyer of the options. I'd be a seller of the options. Generate cash flow. MNMD is magic mushrooms. Awesome. Hey, Trent. ASO, please smash that like button. Yes, please smash that like button if you would. ASO, we'll leave it off with ASO. All right, monthly chart looks okay. Good volume. Weekly chart. Not too good here. $32.18 looks interesting as support. Daily chart. Yeah, we broke support on Friday. Here. We're probably going to head down lower. You do have some moving averages down here, which may act as support. But if they fail, we're going to come back down here to around 32 bucks a share. So no rush. We're going in the wrong direction. We have a lower high, and now we're breaking down to lower lows below support. So I would be careful here. You're welcome, Paul. You're welcome, Franklin. Have a great night, my friend. Everybody, thanks for fundamentally they are criminally undervalued. All right, I'll check it out. All right, folks. Thanks so much for joining in and sharing your Sunday night. I really appreciate it. Again, if you can smash the like button, thank you very much. Subscribe. Everybody have a profitable trading week, and I'll talk to you soon. Be well.